All right, so the Property Investor Show is finally back, and just take a guess what we're going to talk about. So as you've likely heard in the news lately, there's kind of a pandemic and whole kind of worldwide economic situation happening at the moment. And so a lot of investors have been calling us with questions, concerns, really kind of hoping to have some type of forecast about what's going to happen with the housing market, specifically here in Orlando. I think everybody has the same question. All we can really do at the moment is kind of keep our fingers crossed for what's going to happen in the near future, because nobody has really seen anything like this before. However, based upon what's happening recently in the local market in the past 2 to 3 months, while the COVID pandemic has been going on, you can kind of see and you can kind of start to sculpt what is going to happen in the housing market. So believe it or not, you would really kind of assume that with what's going on, people are not buying houses at the moment. Everybody's hunkering down, saving their money, not spending anything, not house shopping, not moving around, making any major changes to their life. But contrary to that belief, there is a significant amount of buyers out in the market at the moment. Along with there being a ton of buyers out there, not only just looking for new houses, but also investment properties, the amount of inventory that's on the market is actually dwindling down. And compared to last year, in June 2019, there was over 8,000 houses for sale in the Orlando market. And this year, in June 2019, there's only about 6,500. So there's nearly a 20% decrease in homes for sale in the Orlando market. Now, that obviously plays a huge role when it comes to home values and everything like that, because with a significant less amount of inventory on the market, there's a lot less for buyers to choose from, therefore help actually raise prices, and prices are increasing just due to the incredible lack of supply out there. I think the inventory dwindling down has really come down to the fact that sellers are really kind of holding out and not making any major moves because they're unsure of what's going to be going on, just like I mentioned earlier, and so they're not necessarily putting their house for sale at the moment. However, buyers are still out there because A, they've just been locked in their house for the past few months, and they're probably thinking, wow, if this ever happens again, I either want a nicer or a bigger house, or I want to be in a better location, or I'm moving out of the major metro areas like New York, LA, Chicago, wherever, and moving to more of a suburb, smaller city like Orlando. I'm going to be working from home more often, so I want more space for a home office. There's obviously a ton of reasons why people would want a new house. Another huge thing, not just taking into consideration the lack of inventory that's on the market at the moment, but the amount of properties that actually went under contract in June of 2020 is greater than the amount of properties that went under contract at the same time last year. In June 2019, there was about 5,400 properties that went under contract in the Orlando market, and in June 2020, there's over 5,600 properties that went under contract in the Orlando market. So not only is there a lower amount of inventory, but there's actually more houses that are currently pending for sale. So once again, it really comes down to lower inventory, greater amount of properties pending, really showing the amount of buyers that are out there and showing that the market is still very active. There are more buyers this year than there were last year, which brings me to point 3. There are probably more buyers than last year, not only just for the reasons I mentioned a couple of seconds ago, but obviously because of mortgage rates. The average mortgage rate right now is 3.04%, compared to last year when it was 3.93%. If you were to buy a $300,000 house last year, it would have cost you $1,420 a month given that interest rate. This year, it only costs you $1,270. So you're saving about $1,800 a year buying that $300,000 house given the difference in mortgage rates. And finally, the median price in Orlando is $265,000. June of last year, it was only $250,000. So there has been a decent increase in home value over the past 12 months, even given what's been going on. Now it's at about a 6% year-over-year price increase, which isn't the 10-12% that we're used to, but 6% is still a good amount of capital appreciation over the past year, especially taking into consideration everything that's been going on. So looking at the market statistics, things are looking good. There are obviously a greater amount of buyers out there than there is inventory. The mortgage rates are looking great. There is substantial opportunity for investors to find a good deal and get it out there. Right now, under the $200,000 price point, every single property that we're putting on the market has multiple offers within 2 to 3 days on the market. So this is Chris Grenier. Thanks for watching my latest edition of the Property Investor Show. A little bit rusty. It's been a couple of months, probably a year actually when it comes down to it, but I'm going to be getting back to normal videos. So I hope you appreciate this one. Subscribe, like, share, do all that good stuff. I'll be talking to you soon.